Hello and welcome to the Fellow Investor, your only trusted news source. On May 16, 2025, Moody's downgraded the United States long-term credit rating from Moody to AA1. This marks the third time in recent history the U.S. has been downgraded. Previously, S&P downgraded the U.S. in August 2011, and Fitch followed in August 2023. Now, all three major rating agencies, Moody's, Fitch, and S&P, no longer give the U.S. a perfect rating. This downgrade signals growing concern over America's debt, fiscal deficit, and political inaction. Without reforms like taxing the rich or reducing military spending, the U.S. risks further downgrades and possibly the global reserve status of the dollar. Let's break down how this could affect markets. Precious metals. Gold is expected to rise long-term as confidence in U.S. Treasuries fades. Silver may follow but remain volatile. Platinum and palladium could face pressure due to industrial slowdown fears. Commodities. Oil and industrial metals like copper could decline short-term on recession fears. Agricultural commodities may be neutral, supported by a weaker dollar. Currencies. The U.S. dollar may weaken due to lost fiscal credibility, but could spike temporarily in a panic. Safe haven currencies like the Japanese yen and Swiss franc could gain. Emerging market currencies might suffer due to capital outflows and dollar volatility. Bonds. U.S. Treasury yields might rise, increasing borrowing costs. But if panic sets in, Treasuries might attract buyers. Corporate and EM bonds may see sell-offs. Tips could rise on inflation fears. Cryptocurrencies, Bitcoin and Ethereum might benefit from a weak dollar but could drop short-term in a liquidity crunch. Stablecoins could face scrutiny if confidence in the dollar erodes. Key factors: the size of the downgrade, Fed's policy response, global market sentiment, liquidity, and algorithmic reactions. Looking back at 2011, gold rose 20% post-downgrade, stocks fell sharply, and treasuries still attracted buyers. Conclusion: winners include gold, safe haven currencies, and possibly crypto. Losers, the dollar, high-yield bonds, and emerging markets. Prepare for volatility. Stay diversified. Follow policy closely. Thanks for watching The Fellow Investor, your only trusted news source.